Good morning, Ayush. Good morning, Ria. Good morning, Sid. Good morning, Sandeep. All strategies results are there on the Weekend Investing Hub and the Small Case website. Please go and see the performance. I will show you what I have in terms of the quarterly performance. So you're asking. Second. This is where we are in terms of the 2 quarters of this year and the FY25. This quarter has been for all indices very uniform across different indices. So 7.5% odd on every index. And there have been some India top 10 has done really well this quarter. Capital Compounder has done well. Evergreen has done well. ATH, ATH2 have not done so well. Overall, however, they're pretty much in line with where things are. Okay. Yes, good morning, everybody. Good morning. I was taking an early question. We'll go through this in the normal format. I'll give you some of my thoughts on the markets, and then we will open it up for Q&A, just like every time. If you have any suggestion, please do let me know. We can do that as well. So let's see the screen. Okay, I hope you can see my screen. Good morning, Aryan. Good morning, Basil. Good morning, Vishwas. Good morning, everybody. Very nice to see so many of you here. I hope my audio is clear, and let's start. So the context remains pretty much the same. This is the, let's go down to, let's say, the weekly chart. This rally that started from March 2023 is about 18 months old. And in this 18 months, we've had, 2 or 3, you can say, periods of lull, maybe this as well. And then, of course, the election drop, and now we are having some sort of a lull moment here. So the rally is progressing very nicely. I don't think there is any worry in terms of this rally breaking down as yet. You had a significant pivot here. And this is now the most significant pivot going forward. The election day result day low, which is 21,300. So I think we are making higher highs and higher lows, so there is no issue. There is one minor, you can say, a pivot here as well at 23,900. So these are the sort of the points that the most of the market is going to be looking at. So if we start to breach 23,900, there will be more selling. But I think this base that has gotten formed, you can say this, maybe this somewhere around this period. This is a very strong base now, because breaking this would really mean, the market is really breaking down. So market is doing quite well. I think the reasonable trend is, we are, will sometimes breach the slope on the upward side, sometimes on the downward side, but pretty much that is the slope that we are carrying forward from here. And this period that we had, from now October 21 to May 23, so another maybe about 18 months period. This, of course, can happen anytime. This also was a result of a a sort of a doubling rally from here and then a consolidation, and then from here we have not yet doubled. So I mean, even if you see from the bottom right here, I mean, we have still 3-4 thousand points to go before we considering a doubled here. So all is good, I think. There's nothing much to worry on the small caps. In fact, the rally has been very, very strong. I mean, this is going from 8,000 to 18,000 uh, in the same time period. So here maybe some cool off is potential. I mean, this kind what happened here, there's a potential of happening here. Uh, but again, it will depend on so many other things. Difficult to call. In terms of interest rates, I think India interest rates, they may not cut, and there is some talk after yesterday's uh, jobs report in the US. The jobs report has come out very strong. What job numbers they were expecting, there were 100,000 more jobs than that. So there may not be more cuts in the US also. So this one time 50 basis point cut has happened potentially, and now maybe further cuts will only fuel inflation there, because the economy, either the economy should have given an indication that the economy is weak. When you're creating many more jobs than what is expected, then obviously there's likely to be no further cut. So from that point of view, maybe this rate cut scenario will not play out. That is one sort of thesis that is coming around. Um, Besides that, the major, I think, two issues currently are uh, the China factor. If this, after 8th of October, if Chinese market open and continue to rally, like Hang Seng, despite Chinese market being closed, continued to rally in the last few days. So, I mean, this is the kind of rally that, I mean, they've gone from 17,000 to 22,000 in a matter of 2 weeks. Although on a very larger scale, it is still coming out from a bottom. But still, I mean, this is amazing rally. And despite a very sharp cut 2 days back, I mean, yesterday again, it hit a new high. So if Chinese market open on 8th, and this was the China market, this was till 30th of September. So this was 30th, was right here. So Hong Kong market has actually gone up much further post the 30th close also. It is likely that the Chinese market will, open with a gap up, and then let's see what happens there. Because if that remains very strong, then there will be more FII selling in our market to go invest there. So that is one thing that is sucking out or shifting of liquidity that is happening from India market. Although the domestic investments, the DIIs are giving a good fight, and they are able to buy almost similarly what FI is selling, but it dampens the sentiment. Uh, the other thing is, of course, if this escalation of uh, Iran and Israel conflict happens, so crude oil is our worry, and you can see that suddenly from 66 it has gone to 75. And if you ask me personally, I think we've had a very long period where crude oil has not gone anywhere. I mean, you just see the same rates were there in 2006. So 20 years, oil has not gone anywhere. So there will come a time when, oil will go somewhere, and it may go to 150, $200, I don't know where. It can't remain there, simply because even if whatever may be the demand supply situation, the value of the dollar is going down. I mean, if I were to see the amount of dollars in the system, what do they call it? Money supply. Okay. Let's see what has happened. since 2006. If there was $1.3 trillion then, there are now $18 trillion now. 10 times is the amount of money created. So ideally speaking, crude oil should have gone at least 5, 6 times, if not 10 times. So this is going to have its impact sooner or later. And that is why I feel all asset classes are going up because of this. We've created so much money in the system that it will keep sloshing around from one asset class to the other. Uh, Anyhow, I don't want to digress from our current. And we also want to sort of showcase gold. So gold in INR has done very well, 76,000. Um, and you can see that since 2016, from 23,000, it has gone to 76,000. And I've been sort of irritating my viewers with a lot of gold comments. But thankfully, nobody has come back and told me that to stop it. So this is very important now, actually, jokes apart. This is very important. Very few people, actually, advisors or market commentators like gold. They say put 1% or 2%, or maybe you have 100% equity. I think it is very important to understand the global context. Let me just show you one or two things on this. Let's say we look at Shanghai market. Okay. So while China did extremely well in 2006, 7, 8, but from 2007 top at 6,000, we are now at 3,000, despite whatever has happened in the last week. So in the last 15 years, equity has not gone anywhere in China, and China is, you can say that it is not a fully a free market economy and all those things. But still, I mean, this can happen to any place, right? So, but what has happened to uh, so investors in the last 15 years have lost money in Chinese equity, you can say. Now, let's see what investors of gold in China have done in the last 15 years. I don't have that data from 2011, but still from here, I mean, they have at least doubled their money, right? Same thing, if I were to look at Japanese investors, so Nikkei 225, Nikkei 225 is, why is I'm not getting more? Yeah. So while this, let me just see why. Yeah. So monthly chart on Nikkei. Okay. So here you can see. So this is something that I always think can happen to India. Something of this kind over one decade, where it becomes so unrealistic and so overpriced that it may take a very long period to for equity prices to come back after the crack. And this is possible that funds keep coming in, keep coming in, keep coming in, and that asset class just keeps going up irrationally. Just look at where how they did in 10 years before the crash. So 89, and we were here at 79 at 6,000. From 6,000, the index went to 40,000. And then it retraced after 20 years to 6,000 and now has come back. So if I were to plot uh, gold over this, uh, and the data is only limited. Let me just see. Plot gold and this is also limited data. But uh, so you can see here, despite the uh, recovery in the Japanese market, just see where gold in Japanese yen has gone and gold in equity has gone. So while I never say gold is competing with equity, but you can see that whenever there will be crisis or some abnormal situation, this is going to bail you out. So it's like an insurance. And hence, that is extremely important to have allocation. Let me come back now. I don't want to take up too much time in my uh, speech here. So it's 11:15. Let's start questions. We'll have this session go on till 12 o'clock. And however many questions I'm able to answer, I will answer. Okay. So Vivek says, can we add allocation to MI Evergreen from MI20 now as the market is looking more volatile? So it does look like that large caps may outperform small caps in terms of small caps may fall more, large caps may not fall much. That is sort of a consensus that is building around. But again, the whole thesis that we have is that don't worry about the opinion. So I would suggest if you can, I mean, have a spectrum of allocations in large cap also and small caps also, and then let them take care of the situation. I mean, if you look at, let's say, last 6, 7, 8 years of small cap performance of any strategy, it has taken care of itself. I mean, why we have to preempt that we should move in, move out. So as long as you are comfortable with you know uh, uh, sitting in the strategy and letting the strategy take care of itself, it will do that. Dhaval says, I've invested with MI20. What is the span of time when you compare the past returns to rebalance? So we have a proprietary methodology how to create momentum ranking. Based on that, we decide. Based on that, the algo decides. Actually, I don't decide anything on which stocks to pick. Good morning. Okay. Individual stocks, let's avoid that because there is license issues in terms of talking to of it for individual stocks to individuals. But yeah, we have this stock in several portfolios. Um, on the weekly chart, there is a lot of RSI and price divergence. TM is saying how to interpret it. So, price, I mean, I don't want to get into technical analysis class here, but as I mean, you have to see if the price is making, let's say, higher flows and the RSI is making, lower highs, then that's a divergence. It is interpreting that the price may not continue to go up and it will start to fall. That is one interpretation of that. Basil says, I see your recommendations on gold, which is very convincing. Could you please share your suggestion on silver considering the near term value? So silver, I think, is a very weak cousin of gold. But whenever there is extreme crisis, silver will like perform 5x of gold. So if gold goes up 10%, probably silver will go up 50% in that small period. So there will be very concentrated periods of super performance from silver. So it is more of like, buying options versus buying stocks, that kind of a situation. That mostly you will lose in silver, but there will be one scenario once in a blue moon where you will really hit a 6 on silver. But then I don't want to play for that uh, one trade of the year. So, I mean, I avoid silver. And my larger thesis is that silver is not playing a role in the monetary system. Central banks are not accumulating silver, they are not accumulating palladium, they're not accumulating, any other metal but gold, which has some significance in the monetary system. So that is the main reason why you would want to have gold also. How will dual momentum work between gold and momentum portfolio? It will work very well. We don't have a dual momentum portfolio for the sake of the churn cost becomes large in that kind of a scenario. Suppose you have one momentum portfolio of 20, 30 stocks, and the second asset you have is a gold ETF. Now, the dual momentum will ask you to churn between gold and that momentum portfolio. So either you are in gold or you are in momentum portfolio. And if there are churns happening every other month. Then entire portfolio is getting sold, entire portfolio is getting bought. A lot of tax issues also will perk up. So it's a bit messy, but yes, it works. I mean, on an individual basis, potentially you could do that maybe. Sanjay says I have 14% in gold and 15% in cash and looking to move 5% cash to gold, looking at sharp rise in gold price. What is the best way of making this transaction? I think this answer can be given only by your advisor. I can't give specific advice on your specific situation, but in general, you should have an gold allocation percentage towards which you are working, whether it is 15, 20, 25, 30, 45, 50, whatever it may be. So gradually keep accumulating towards that goal. Uh, there are people who also do 6 monthly or yearly rebalance of their position. So let's say somebody has put 75% in equity and 25% in gold, and at the end of the year they find that their equity has become 85% and gold is 15%, so they move 10% to gold. That kind of reallocation rebalance actually also works well, but then to each the way they would want to do this. uh, Sorry. Uh, what to interpret after forming weekly bearish engulfing pattern? So I think you will need a class on technical analysis for this. There are plenty of that on the web. As the name suggests, a bearish engulfing pattern on weekly is telling you that there is probability of a down move. Um, Swapnil says, I'm subscriber of Evergreen, where I can see cap will allocations means in Evergreen, how much is large cap, how much in, oh, okay. So I'll just show you also how to see this. Let me just open up weekend invest. So you can go to weekendinvesting smallcase.com. And let me just show you. Give me a second. Are you able to see the screen? Yeah. So you go to Evergreen and you go to fact sheet and you say continue. Okay. And sorry, fact sheet. And here you have it. So Evergreen has 25% in gold, 41% in mid caps, and 33.75% in uh, large caps. So for every strategy, this sheet is updated uh, uh, on a live basis. So you can go ahead and look at this sheet, and it will tell you much more about that strategy also, and other things about the manager and about the segment and so on and so forth. So please use these fact sheets which are available on the Weekend Investing app. Okay, coming back. Prasanna says, is trailing stop loss the best way to exit momentum strategy? Can you please explain other options for exit? So there are a lot of exit options that you can have. One, of course, is a hard exit, which is stop loss based. So maybe you have decided that I've entered at 100 and 80 is my stop. That is one hard stop loss. The other way could be that maybe you will follow some indicator. So maybe you will say every time the price dips below, let's say, 20-day moving average, I will get the exit. There could be some other uh, indicators or oscillators that you may use, or you may just use a percentage drop. So you may say that if stock drops 25% from its recent high, I will exit. You may say if there's a super trend strategy that I'm using, then if the price goes below super trend, I will exit. You may say I'm following RSI If RSI goes above 70, I'm buying. If it falls below, let's say 50, I'm selling. So there is no one way or correct or wrong way. I mean, all this is available to you. The main thesis here should not be to find that holy grail which is going to fit all the past data. The main thing is that you have to find an exit plan which is not only, of course, it should make money for your strategy, but it should be executable. So a lot of times, if you have a price-based exit, then are you defining when is that price coming? Is that on close of the day? Is that a close on the week? Hourly close? If it happens intraday, will you exit? So a lot of those variables are there. Uh, so define your time frame, define your way of exit, uh, back test that, forward test it, um, and just anything that makes you comfortable, you should do that. There is no right or wrong way really. Manish says PSU म्यूचुअल फंड में इन्वेस्ट करना सही है. देखिए पिछले 10 साल में तो सही नहीं था. 2014 से जिन्होंने इन्वेस्ट किया था पीएसयूज में, उनके तो 6-7 साल खराब हो गए थे. अभी सडनली पीएसयू में ट्रेंड आया तो हमारी भी सारी स्ट्रेटजीज ने पीएसयूज में इन्वेस्ट किया, पीएसयू बैंक्स में इन्वेस्ट किया, पब्लिक एंटरप्राइज स्टॉक्स में इन्वेस्ट किया. तो स्पेसिफिक सेक्टर ओरिएंटेशन वाले जो फंड्स होते हैं उसमें इशू ये हो जाता है कि लेट्स से नेक्स्ट 5 इयर्स पीएसयू डोंट डू एनीथिंग. तो अब वो फंड का मैंडेट ही पीएसयू का है, तो वो तो उसी में इन्वेस्ट कर सकता है. उसको अगर फंड मैनेजर को मालूम भी है कि मेरा सेक्टर नहीं चल रहा है, वो फिर भी वही इन्वेस्ट करेगा क्योंकि उसका मैंडेट वही है. तो मतलब इस करके मुझे सेक्टर स्पेसिफिक कुछ भी पसंद नहीं है. मतलब सेक्टर में आपको फिक्स नहीं होना चाहिए, आपको फ्लेक्सिबिलिटी होनी चाहिए कि भाई मेरी स्ट्रेटेजी मेरे को किसी भी सेक्टर में ले जा पाए, जो परफॉर्म कर रहा है वहां ले जा पाए. वाई शुड आई जस्ट फोकस ऑन वन सेक्टर? दैट इज माई थॉट. बट मतलब देर आर all kinds of views in the market. Raghav says, can a 50% correction come in small can mid cap? Yes, it can come. Let's also, now this good question has come. Let's also see what has been the past history. Okay, let's come back to the screen. Let's go to small cap. BSC small cap has more history. So let's go there. BSC small cap index. Let's remove everything else. So this is where we are, and you can see that this time we have really done something special. So this fall in 2008 went from 14,000 to 3,000. So let me do it in percentage. Okay. So if we were to go here, so 76% fall happened in 2008. Then next fall was 52%. Then next fall was in 2020 was 55%. And the small recent fall was, let's say, 20%. So to answer your question, yes, 50% is very much possible. Even after we fall 50%, if we fall 50%, we will come here. So essentially what you're seeing is that the rally that happens can come below the previous peak, and it has happened many times before. So it can come anywhere actually. But let's hope that it doesn't happen that way. So the whole idea is that the strategy should be able to protect you. If a small cap index is falling 60%, maybe your strategy will fall 30%. And hopefully when it swings back, you will make 200% in the next swing up. So that is the idea behind having a strategy which self-corrects itself. So don't be afraid of small caps or mid caps is all I can say. But yes, have a 5 to 7 year view, especially after a humongous rally like this. If you are able to, sustain the fall, that is how, the alpha will get made. If you get afraid, if you leave the ship once it falls, then money can never be made. So to that extent, yes, I mean, what can I say? Uh, Rushi Priya says, please tell your view when the small finance sector will improve. I don't think I have a view on small finance. Uh, I'm sorry, I don't have a view there. Um, Subodh says, what is the right level to buy money? What is the right level to buy silver? Okay, let's look at silver. So I think it is just about breaking out. So I mean, it's a buy right now. I mean, even if I go to down to weekly, it's just broken out. You can take a stop at 26 and go long. I think it is setting up for $50 in my view. But they don't let silver go up too much. So ideally, it should go to 50 in my view. That's my sort of gut feel take. Uh, And Aryan says Hang Seng has literally followed the path that Anurag Singh was describing in the SIPAD. Yes, you're right. Yes, yes, that's right. Um, in case of extreme market downward movement, does momentum investing trigger go to cash? So absolute momentum strategies like all cap, ATH, MI25, HNI Wealth Builder, all these are absolute strategies. They will go to cash. In fact, this week's rebalance strategies have gone to as much as 15 to 18% cash in some cases. 5% to 20% is roughly the range. Uh, and the other rotational strategies will gradually move towards defensive stocks, which fall lesser, hopefully. So that's how it will work in downtrend markets. Abhishek says, based on overall costing, transaction, other costs, is NRO account better or resident account? I think resident account always is a lesser cost. Brokers know that, NRO money is coming from rich folks overseas, so they charge you more. Uh, so a resident account is always cheaper. Even in case of the largest discount brokerage, there is zero delivery on domestic account, but I think they charge some few hundred rupees per trade for NRO account, if not NRE. NRO, I think, yeah. But it's definitely more expensive for NROs. Um, Vipul says, how SGB price action perform with actual gold price, because all SGBs are trading on premium. And one newbie question is, can we buy on BSC, sell on NSE? Yes, you can do anything of that kind, buy on BSC, sell on NSE in my view, because the product is the same. It's just different exchanges. SGBs are not getting launched in terms of new series. So the entire focus of the investors who want to buy SGBs has come onto the secondary market, and that has caused all the premiums to go up. 2 years back or 2.5 years back, I was shouting from the rooftops that, SGB is available at a discount. I mean, this is free money that you're getting, but who listens? So now, of course, the other extreme has happened where all SGBs are at premium. So again, I would say the premium is only to the extent that the additional returns of 2.5% that you're getting. I still think the premium is not to the extent that it is discounting the fact that you're going to get tax free under them. at end of maturity. Are you getting it? So there are two factors based on which premium should have been decided. One was this additional return, so there would be premium because of that, and one would be because this is tax free. So you're saving 12.5% capital gains on that. So I think that much scope is still there in SGB, although it keeps changing for different strategies. And Mr. Amit Wani has created one very nice tool to calculate premiums. And let me also show you that tool while I'm here. Uh, so SGB. So this is SGB Analyzer, and I'll put it in the comments also. And you can personally thank Mr. Vani for creating this tool. He's a software guy, and he created this tool to analyze SGB. So this is the SGB Analyzer, and I think it works when the markets are on, and it will show you what is the current discount to fair value, total yield to maturity, and so on and so forth. So use this tool when the market is on, and uh, you'll be in fine fettle. You can contact him here, thank him here, or you can support him. You can send some money here if you get benefited. Um, and IBJA rates is, let me also show you while I'm here. This is the official site of the uh, Bullion Jewelers Association, and a rate is decided and released twice a day. So you can get the spot rate, approximate spot rate in India by coming here and seeing this rate. So you for 24 karat gold and 22 karat gold. So this is like the gold standard for gold. When RBI matures a sovereign gold bond, they take 5 days average of this price of the previous week. So if 30th September was the maturity of one of the recent sovereign gold bonds, then for the previous week, they took a 5-day average of this price and gave that as this maturity amount. Ayush says, in a market day, which is the best time to execute a transaction, EOD price always gives a confirmation of the entire day stock movement, but we miss possible breakouts in stock if we react as per EAD price. While you're right, I mean, uh, we do miss out on some of the EOD price, but I think over a period of time, it really does not make that much of a difference in the larger scheme of things, because the performance also, what we are calculating is based on the OHLC weighted average. So if OHLC is sort of the average of the day, and if most people are buying sort of at the average of the day, I think as a cohort, we be very close to where the performance is. But yes, if we were able to do it at EOD, it would have been possible to do it at EOD. Uh, let's see in future if we are able to come out with, see, the problem is that the delivery of the recommendation and the execution of the recommendation needs to happen within 5 minutes, and for that, there are a lot of technical challenges. So maybe if we were managing money someday, then we are able to do it, because we know that we can execute within this time frame. The algo can slice the order and do whatever in less 5-10 minutes. But if this has to be disseminated and the person has to act on it, then some people will get late, they will complain, there will be some delivery issues. All that cannot happen in a retail product. So that's the challenge. Bhavin says, your teaching says that enter after positive momentum and exit after negative momentum. Cochin shipyard is down 45% from all-time high. Please educate me about our exit strategy. So stocks that will go up several 100% will have much more room that will be given to that stock to play out, before they exit. There is no fixed percentage that we are using that we will exit after 20% or 30%. But most likely, this is one of the unique cases probably where the trajectory was extremely exponential. And because of that extreme exponential strategy, the strategy will give more room for it before it exits. Maybe it is very close to exit, but not yet there. How SGB price action perform with actual, this we've already taken this. Raghav Gupta says, your view on SEBI daily expiry change. Actually, I'm nobody to give a view on this, but since you've asked, I'll give you my peace of mind. I think the exchanges have gotten very greedy in the last few years. And the entire ecosystem has become like a casino. Uh, I remember in 1996 when I first entered the National Stock Exchange as one of the first members of the exchange. And if somebody used to call it a speculator or a casino, we used to feel really bad because that was not our intent, that how this should, proliferate. Uh, but over a period of time, I think the exchanges have realized that people just want to speculate, most of them. And they are coming out with more and more products that are suitable for gambling and speculation. And all this is just in line with that. I mean, what is the sense of having weekly expiries on all indices? It is just extremely shallow in my view. Um, it is not following any global precedence of any kind. There is no global exchange which offers these kind of products. Uh, and unfortunately, our regulator has also fallen in line with however exchanges want to lead their businesses. But now, of course, the outcome is there. I mean, there is danda from the finance ministry. What are you doing? And now these things are starting to roll back a little bit, but I don't think it changes too much. An addiction cannot be changed in a day. Even if you are smoking cigarettes and tomorrow and every few years in the budget they say, okay, we are hiking up the excise duty on cigarettes so that people will smoke less. I mean, has smoking reduced? I don't think so. So while it is good that some curves are coming, but I think uh, the speculation is way too much right now also. And of course, this whole influencer thing that people are getting influenced with, and youngsters are coming in. They don't want to work in jobs. They want to just 2 days back. I have a, I'm telling you a personal story. I have a trainer who helps me with the physical exercise every day. He brought his brother. That, sir, he wants to talk to you about stocks. I said, okay, fine. So he came. I said, I work in IT firm and I'm a software engineer, but I don't like doing that. I want to trade and I want to do options. So he has been doing options for last 1 year. He has been losing money. He doesn't put stop loss. He doesn't have a strategy. So that lure of quick money is really big out there. So that's how I guess people are getting a bit, what should I say, distracted from the core of what their core life was. They just get distracted. Um, so I think in my lifetime, I have now completed almost 30 years. I have not met more than maybe a handful of people who have made any significant money in trading. Uh, so so that probability is much lower than any other business actually. But it seems easy, so everybody's attracted. 4% fall in a week hasn't happened in the last 5 years. How can we decipher? No, this has happened. We actually did some daily bite just yesterday. So 2021, 22 was much higher. Uh, uh, so maybe you are referring to some earlier video on US markets. I don't know. Uh, this we've already taken. Vijay says nowadays sectoral ETFs, infra Bs, metals, pharma, FMCG, CPSE, liquidity is booming. Can we go ahead and invest in ETF as it involves less risk? How is it less risk? Please explain me that. Uh, if the sector falls through the floor, how is it going to save you? If let's say CPSE doesn't work for the next 3 years, it will remain invested in CPSE and go down with the CPSE index. How is it less risk? So this concept that ETFs are less risky, this is a foreign concept for me. ETFs are as risky as anything else. I mean, yes, they may be based on a index which may lend them to be lesser volatile. That's the only thing that is possible. Otherwise, riskiness, I don't think is less. There are ETFs in the US market which are 3x 3x Tesla ETF, something like that, or 3x Magnificent 7 ETF. So ETF is just a format that it is exchange traded. It's a fund which is exchange traded and it may have a slightly lower cost. That's about it. And I think these sectoral ETFs, all these AMC companies have become so greedy. They are pushing these sectoral ETFs like crazy down the throat of retail investors. जो sector चलता है उसका ETF बना के they say okay you buy this now. And gullible investors, let's say you are a business person, you are running your factory, you have significant savings which are coming. Some advisor will come to you, sir देखिए ये बैंक भी इसका ETF आया है, लास्ट ईयर 60% रिटर्न है, वो लगा देगा उसमें. So it is all so misleading, based on last year performance, and all these specific sectoral products have huge margins for the distributor. If the normal distributor gets 1% on mutual fund, in these sectoral ones they will get 2%, 3%. I'm hearing PMS people are giving 6% to get a client to them, to their PMS service. वो 6% आप पहले से दे दोगे for distribution cost, and you're going to charge the client, let's say 2% in a year. So 3%, 3 years fees you have already paid in advance to get that client. And now you will have to do all kind of jugglery, risk taking to make sure that you make more than 6% in that 1 year. I mean, it is a dirty business actually. Okay, how to identify good bonds? Some insights, please. I think I am no expert in bond buying, so first disclaimer is that my simple thesis here would be, if I ever had to buy bonds, I never buy bonds. Is to try and time the interest rate cycle and buy bonds when the interest rate cycle has topped out, and get out of them once interest rate has bottomed out. This would have been my bond strategy if I ever had bonds. Nilesh Bhandari has a question, but he has mentioned several stock of our strategies, which is not allowed. So we will be not taking up that question. But in general, the question was similar to the one earlier, which had one uh, stock, Cochin Refinery. That why are these stocks not getting removed? The answer is the same. Stocks that have exponential performance will have more room before they will be exited. And it is not a discretionary decision. These are all based on the strategy that we have. Murali Kela, which option is good to invest in gold? Gold, Bs, SGB, etc. So there are only 4 or 5 options: physical gold, sovereign gold bond, ETFs like gold bees, digital gold, and let me know if there's any other kind. Uh, and in this order of their being the best priority. Physical gold, nothing can match physical gold in my view. It may not give you the best returns, but from a safety perspective, there is nothing more safer than physical gold. Sovereign gold bond, very easy to get, tax free at the end of maturity, 2.5% additional interest rate. But government can say tomorrow, thank you, bye bye, we are not giving you any tax free. So that is the risk there. ETFs, they charge about 1% expense ratio every year. So your gold returns are reduced by 1%. So versus physical gold, I see no reason to buy gold ETFs unless the physical gold handling is something that you don't like to do. And of course, in a gold ETF, the AMC, the asset management company, can tell you, sorry, we didn't buy the gold, and please do whatever you like with the number that you have in your demat account. So that is a extreme extreme scenario that I'm pointing out, but it can happen. You may have 1 lakh units of gold bees, and tomorrow the asset management company may say, sorry, we don't have that much gold. So not gold bees, any gold ETF, sorry, I shouldn't name any gold bees. And digital gold is again the same case. You have nothing in your hand. It is all on record. If PTM says that you have so many units of gold, you have to believe them. Tomorrow, if they say you don't have it, then you can go and contest it in the court. So every type of gold investing has its own issues, but some advantages, some disadvantages also. Vijay Kumar says, compared to direct stock investment and provides good portfolio diversification. What are your thoughts? I didn't get the question. Okay. Nilesh, I'll take this one. In all momentum strategies, is it necessary to rebalance the weights as well as not just stocks? Otherwise, it will lead to booking of loss each time weakened loss-making stocks are removed. Let me just read and understand your question. So you are saying that if the weights are changing, then can we not change the weights and only change the stocks? Yes, you can do that. That will not see those incremental changes that are sent by the algorithm of small case are an attempt for the portfolio to move closer to the model weight. But if it is slightly away from the model weight, I don't think it will make such a big difference. So you can avoid them if you like. Truth says, why banks, even after good performance, still at low PE and especially 10-year PE? I don't think PEs are the ways to look at banks. I'm a poor analyst for PEs actually, but I think in India banks have always been extremely overvalued, especially when you look from price to book perspective, and they remain to be so. I mean, if you compare the top banks with any global bank, you will find that their price to book is like double or triple of global banks. So India is a very unique market for banks valuations. DS says, what is the ideal time frame for momentum? Weekly, 15 days, or monthly? I mean, it is like asking what is the ideal, driving speed? Should it be 40, 60, or 80? There is no ideal scenario. It all depends how you want to run your strategy. If you want less churn, if you want less uh, activity, less active portfolio, you can go for monthly. If you want more, you can come down to weekly. If you want even more, you can come down to daily. So there is no right or wrong answer here. Karthik says, I have invested in both MI top 10 and NNF 10. NNF 10 though large cap is showing lot of volatility compared to MI top 10. Why is this anomaly? I'll show you that anomaly. So let's go back to the screen. I have only 5 minutes left here. Okay, so let's go to Nifty and let's remove all this and let's add Nifty Junior. Can you see that there is no similarity between the two in terms of their uh, you know performance? And also because a lot of stocks that come down from Nifty to Nifty next 50 and some stocks move up from Nifty 50 to Nifty. So there is churn because of that also. So Nifty Junior is a much more volatile animal versus Nifty. And we did a recent study where we showed that stocks that move into Nifty somehow lose most of their volatility when they go there. And because of maybe, there is over ownership, there is over research, all kinds of algorithms and are running on Nifty stocks. So somehow volatility goes down dramatically there, and Nifty next 50 is where most volatility is there, and hence you will see it in the strategies based on these indices. And I think largely both these strategies are beating their respective indices very nicely. So I'm not really worried about those products at all. Parag has an interesting question. If we have 10 years flat market, what happens to all the retirement calculators with inbuilt 12% returns? Completely wrong prediction. Yes, so that is a reality that trees don't grow to the skies. Uh, People in Japan, people in China, people in so many other countries have found out that these calculators were working when the markets was in the going up phase, and then when markets didn't do well, all the calculators went wrong. So hence asset allocation is very, very important. As long as you have inflation and high interest rates, all this will continue to work. As the economy gets matured, which is very far for India, fortunately, it will be very difficult to find alpha. And US is a very specific case. We can't say all countries are like US. So if India, after 20, 30 years, may come to a situation where, just blindly buying Nifty may not work at all. And I still think blindly buying indices is not the right way, because index can also do a sort of a hockey curve in three. Okay, so let's do a mental example. Let's say Nifty goes up some 25% CAGR for the next 5 years, right? So it will go some 2-3 times in the next 5 years, and then for the next, let's say, 10 years, it doesn't do anything. End to end, you will still get 12% CAGR. But then if you miss this rally, or if you are gradually bringing in your money over the next 15 years and you miss the first 5 years, then you will not be able to get the same returns as others. So those risks are there in terms of index not performing for long periods of time. Whereas if you have strategies that are able to get the strength out of those index, those hopefully should keep performing. So this, see, there is no free lunch in this world. That concept, at least I believe in very, very strongly. And index investing is becoming like free lunch, right? So you can borrow money at 8% and invest in index at 12% and you make 4%, right? So this ideally should not work for too long. So I'll leave you with that thought. I'm at the end of my time. I'm sorry if I have not been able to take all the questions, and we'll try to hopefully do this more often than once a month. Uh, If there's any burning question which requires immediate attention, please send it to support@weekendinvesting.com. You can copy it to me. Uh, we'll take it up within 24 hours. But if it's general in nature, you can ask, you can tag me on Twitter. I'll try to respond there as well. Uh, but let's take it next time then. So thank you so much and have a great weekend. Wish you all the best for upcoming festival of the Shera. If anybody from Dubai is here, we are doing a Dubai hangout on 20th of October. I can meet you there. And otherwise, we'll catch you near Diwali then. All right. Thank you. Bye bye.